join me here on the stage, that'll be great. And we have the pleasure to have the hardest panel. After lunch, everybody's half asleep, tired, looking forward to dinner. So we'll have to make it interesting and entertaining. By way of introduction, my name is Iliya Grozdanov, I'm from Bulgaria, energy lawyer dealing mostly with renewables for the last more than 15 years. Guys, I will ask you before you start talking to introduce yourself just briefly. I think this panel is suited well because PPAs seem to be the keystone of securing the income for any project seems to be the keystone of any project. If you don't have income, you don't have financing, you don't have a project. 15 years ago, it was very easy. We had one off-taker, feed-in tariffs, long-term PPAs, everything was easy peasy, nice and easy, and banks were loving it. Things, at least in this part of the world, changed dramatically around 2012-13 when we saw huge investor interest and suddenly the off-takers, especially state-owned, realized that they cannot pay for this energy. Things changed, and at least in Bulgaria, there's no subsidies, no CFDs anymore, everything is on market terms. On the PPA market, at least my observations over the last years were that on the consumer side, consumers tended to sign not more than 1 or 2 years PPAs with merchants to secure a fixed price with balancing cost. This changed last year when the war started and prices skyrocketed. Quite a few merchants went bankrupt because they couldn't take the heat. Suddenly clients were left on the market and merchants started selling energy, at least in Bulgarian market terms, plus premium, which created a huge portion of lack of predictability of the costs, for example, of a hotel or a factory or a shopping mall. The owners could not predict their cost of energy because it was changing every year. On the other side, merchants were not, producers were not happy with fixed prices. At least my observation says that this changed this year, and at least in Bulgaria, I see a trend that on both sides, on the consumer and on the production side, there's big interest in signing medium, long-term PPAs with fixed prices. Corporate PPAs are kicking in, at least in Bulgaria. I'll be very happy to hear your view in the other parts of Europe, but what I read in reports also that corporate PPA seems to be probably the next big trend, and my personal opinion is that this is driven mostly by the ESG compliance factor that all buyers and all the consumers of energy are striving towards green energy. We see all the big IT companies, we see legals, production companies looking for green energy, looking for long-term PPAs. I think the first issue that we should discuss is what are the trends, the recent trends that shape the landscape of PPAs. How do you see the market going on ahead?
So thanks, Iliya, for the introduction. My name is Alessandro Savini. I work for Trailstone. We are one of the leading European PPA provider and off-taker of green energy. We manage currently nearly 7 gig of third-party RS capacity around Europe, mainly in Germany, Italy, but also Spain, UK, Nordics, France, Netherlands. I've been in the energy industry for 20 years, and I mean, this is one of the, I would say, one of the main topic we are currently seeing in the market for the last couple of years. As you said, from a market point of view, I will try to bring our view as a kind of trading house. From a market point of view, we are living in a kind of perfect storm, meaning that from a developer point of view, we are currently seeing high interest rate, which probably could go down in the near future. So from a equity sponsor point of view, probably is not the best time to fix interest rate on a project finance basis for also a long term, 10 years or more. This is coupled also with the capex going up for number of reasons you probably know better than me. So from one side, some bottlenecks in the supply chain. There are also some issues on the EPC availability and also on the cost of the panels and of the wind turbines. So from a developer point of view, again, probably it could make sense to say, as someone in the previous panel mentioned, to say as short as possible, if not even merchant, in order not to lock interest rate at the peak. But this is coupled with an electricity forward scenario which is deep in backwardation. So meaning that the longer the tenure of your PPA, ceteris paribus, the lower the price. So we have seen in Italy, but also in other markets, from CAL 24 to CAL 25 and so on, there is at least 20 euros discount, 20 euros per megawatt hour discount for a baseload product. So again, from a developer point of view, probably it makes sense to stay as short as possible. One possible solution that can mitigate the, let's say, the negative tail, so the spread between the tenure of any, I would say, project finance contract and the tenure of say good feasible PPA could be to enter into negotiation directly with corporate. So one solution would be to try to negotiate a virtual green corporate PPA. So you will then, let's say, you will then meet different target, but the biggest one is that probably by bypassing the role of a trader, so I'm talking against my own interest, you could end up by, I would say, bargaining much higher prices. Corporate, as you mentioned, have been caught during the recent war by, I would say, fear of extreme volatility in the electricity price. So they might be, let's say, pushed, and they might become more aware of putting in place risk management policy in order to better measure their price risk. So that many corporate, even medium corporate in Italy, but also in other countries in Europe, have started also for ESG purposes to be more and more familiar with dealing directly with a developer and a sponsor. So we see it as a growing trend. So developer willing to invite corporate into the RFP tender. I'm not mentioning the big corporate like Amazon or this guy, which are very much familiar with negotiating with developer, but even again medium to small industrial are becoming more and more familiar. So this, I think, is one of the biggest trend we are seeing. And obviously we can, I mean, we are not willing to disappear into the negotiation. What we could do for serving the corporate green PPA would be then providing balancing service on the project side. So obviously the corporate green PPA is a financial instrument in many countries, although there are some special cases where the customer is so big that he's also a market operator vis-a-vis the local TSO, but these are it's a very niche market. So you are mounting a CFD, so a financial instrument that has some impact on both sides balance sheet, so in terms of hedge accountability and also VAT implication, but at the very end, both sides need a BRP, so a balance responsible party who will need to schedule and take owner of the unbalanced charge of the scheduling of the production on one side and scheduling of the consumption on the other side. So we see, people like Trailstone, but also some other traders that are in the audience being able, in any case, to assist both sides with this respect.
Thank you, Vasileios. Your point of view?
Yes, good afternoon. My name is Vasileios Machias. I work for Axpo. We are a Swiss utility based in the city of Baden, mainly hydro-based renewable generator. I'm responsible for our activities in Greece and the neighboring markets of Bulgaria, Albania, and North Macedonia. So my expertise predominantly lies in this part of the world, in the Balkans. I agree with both Iliya and Alessandro. I think you have summarized it well. If I am to go back, say, 3 years, I think we went from one extreme to another extreme. Back in 2020, when Axpo started its commercial activities in this region, it was COVID lockdown times, demand at all-time lows, power prices very, very low. Developers looking for PPAs were suffering at the time by the bottleneck in the supply chain and the very high cost of panels. I remember us trying to negotiate a 10-year transaction at the time with a developer, and the economics didn't make sense. We couldn't secure a high enough price for him as a utility off-taker for him to make economic sense for the investment. Then we went to the other extreme, spike in energy costs, and suddenly there was a big rush, as Alessandro mentioned, for pretty much every corporate in Europe trying to secure long-term, affordable, and predictable energy costs through PPAs. Some of them were closed, I think at quite good levels of prices. We were actually among the first ones to close a private PPA in Greece. Back in the summer of 2021, we closed a 10-year power purchase agreement with a solar PV developer, 100 megawatts of capacity, a park which is being constructed and is being energized in the north of Greece in the next 3 months. And we also closed at pretty much the same period of time, 1 wind PPA in Serbia and 1 wind PPA in Croatia. So I think there were some developers that were at the right moment in time, at the right position to close transactions which make a lot of economic sense for the seller of electricity. But then again, what we saw is probably an oversupply of projects coming to the market, looking for PPAs. And at least in this part of the world, of course, different considerations apply to Western Europe. In this part of the world, we don't have the super large buyers, the likes of Amazon, Google, Microsoft, which will buy hundreds of megawatts without much consideration to the nitty-gritty details because of the size of the operation. here the large off-takers are limited. And what we see now, in fact, is that the market is saturated on the part of the sellers. There are few off-takers able and willing to commit to long-term transactions, and too many developers looking to sell their off-take, their production to corporates. And in fact, as a result of the energy crisis, another unintended consequence was created through the emergency measures that the governments introduced to protect the vulnerable consumers. We have seen all sorts of emergency measures being introduced sporadically in countries like Bulgaria, Romania, Greece, Poland, as well as in Western Europe. One of the key challenges was, for example, the cap on inframarginal revenues. In some countries, policymakers recognized that renewable producers don't just stay merchant selling their electricity on the spot market. They have forward sold it, so the price they actually receive has nothing to do with the electricity price on the day-ahead market. But in many countries, there was no consideration at all about this. So we know of many parties that actually had to break contracts because they were no longer economical, and we know of many other parties that postponed making a decision to sign a long-term PPA simply because the cap distorts the economics of those deals. We are optimistic. We feel that bit by bit the market is returning to some form of new normality, of course much higher price levels than before, so it still makes sense for a corporate to lock in a good, predictable energy cost through a long-term PPA with a renewable producer.
Yeah, I fully agree with you. In 2022, when a few producers came to us and said, well, we have fixed price contracts, but we want to get out of them because the prices are high. Gurpreet, I hope I'm pronouncing your name,
Yep,
excuse me.
Tell
us a bit about your experience in the UK in this matter.
Sure, thank you. Hi everyone, my name is Gurpreet. I'm the fund manager at Atrato On-Site Energy. We are a listed investment trust. We IPO'd actually this week 2 years ago, so it's our anniversary, raising money from institutional investors in the London market. And we focus primarily on investing in solar PV systems with a particular focus on behind the meter INC solar. Since our launch 2 years ago, we've deployed over £200 million in the space, and have now a portfolio of about 180 megawatts of capacity. Our customers include Amazon, Tesco's, Nissan, Marks and Spencer's, all high energy intense users of commercial energy, where we are essentially owning the solar PV systems that are on the rooftops of very large factories, warehouses, distribution centres, supermarkets, or indeed even on the ground nearby the factories, and we have a private wire that connects the two. We have recently also started investing in solar PV projects that are connected to the grid. We have recently signed a long-term 10-year corporate PPA with a company called Britvic, which is a drinks manufacturer in the UK, where we'll be sleeving energy through a physical PPA. So we do a combination of the two now. And our goal as a fund, given that we're a permanent capital vehicle, we're not in this to basically develop projects and then flip, we're in this to develop projects, hold them for the life, is to provide our investors with a capital appreciation as we develop projects and take them through development and construction and get them into operations, but then often offer them a very stable yield, and the only way that we can offer them that stable yield is through highly contracted PPAs. So most of our PPAs are 100% offtakes on a take-or-pay basis. The average PPA length is about 16 years. I think the highest we have is 30 years. The lowest is 10 years. And our model, as I said, is just to avoid the exposure to the merchant curve by connecting with highly credible investment-grade businesses One of the key trends, I think, in the market is certainly been, in our experience in the UK, on the behind the meter side of things. We've obviously, in the UK, had a very volatile time from an energy perspective. In the last 2 or 3 years, prices are very high, come down over the year, but still relatively high compared to historical averages. And what I've certainly noticed when talking to the procurement managers, the energy procurement managers at Tesco's or Marks and Spencer's, who, you know, in the past never engaged in this topic, right? You've got to remember that their whole entire career of procuring energy has been around approaching brokers who would then approach a utility company and then sign for a 1 year or a 2 year offtake. This is the first time that they're now entering into a long-term contract, even if the economics are so much in the favour of solar. It is a big commitment for these corporates to enter into these long-term 20-year, 25-year PPAs. And so there's an education process, right? It's not just with the procurement manager, but ultimately these types of contracts get signed off by the CFO or even the CEO. So it goes all the way up to the C-suite, which is a long process. You've got to take a lot of people across that journey, right, to make them understand how it works. One of the benefits of private wire solar PV is that you ultimately bypass the grid, right? And it's a pretty straightforward sell when you're ultimately disintermediating a big part of your energy cost. In the UK, energy costs for most corporates is about 30 pence a kilowatt hour, right? The commodity cost plus the non-commodity cost. A big part of that cost, around 12 to 15 pence of that cost, is just to pay for the grid. And if you can disintermediate that element, then there's a very, very low chance that entering into a PPA like this, no matter what happens to gas prices, will become out of the money for those corporates, whilst we can still maintain a decent return for our investors, whilst not taking any merchant risk or any merchant exposure. To date, all we've done is invest via equity, so we'll look to project finance once we get a bigger portfolio. But I think in the last 2 years, especially given the volatility in energy prices, this is now on the agenda for most corporates. There was a point during 2022 when some corporates were paying up to 70p or 80p a kilowatt hour. That comes straight out of profits, right? That could kill a business. In the UK, we had the government step in to support that, but that won't go on forever. And so, whilst there's the sort of green kudos of this and the economic savings of this, I think the biggest factor now is about energy security. It's about having a hedge. And in the UK market especially, it's very difficult to procure energy in the traditional means beyond 3 years. And so having this solar PV system on your roof without paying any capex to provide you 30 to 40% of your energy needs over the course of the year at a very low price is actually a really neat hedge for most corporates.
Yeah, I confirm the same in Bulgaria. Most of the big consumers, like mining factories, have already invested, but they do a little different. They invest themselves in behind the meter plants to secure virtually free energy and reduce their bills. Yiannis, what is your view on the trends in the PPA market?
Yeah, first of all, good evening to everybody. My name is Yiannis Vougiouklakis. I'm a director at PwC here in Greece, in the strategy team, where we are mostly dealing with all the issues relevant to the energy market in terms of both sides, both from the side of developers, but also from the side of consumers, and in the context of PPAs, of course. Just briefly to say that I'm in the sector for more than 20 years. In the absolute majority, almost 20 years, really working close to state bodies and governments in the formulation of all relevant renewable policies, here also in Greece, but also at the EU level. So I was in a way, let's say, in the whole route, let's say, from, let's say, having from a strictly state aid scheme, let's say, moving now to a more, let's say, market-driven scheme. However, maybe it's also something that all of us here agree. We see that also the market here, the PPA, both in Greece, but also I think in Europe and in the region, from, let's say, its infantry in the beginning now start to be mature. And maturity, it's good, but also brings a lot of challenges. So we have to adapt. For me, one very easy, let's say, observation is that there is no terminology of what we consider as a PPA. Let's say. There are completely different types of PPA now in the market. There is no a single model for PPA. In the past, we had, from base produce or base forecasting. Now we have gone more to base load, because we have virtual and physical. We have, let's say, products like the one in the UK, where here in Greece we call it, let's say, net metering or even virtual net billing, which is more or less the same thing. And on top of that, we have completely different regulations for the market, let's say. How, let's say, such kind of projects are exchanged, are available through the market, in other which conduct through aggregators or not, what's the role of suppliers and so on. So for me, it's a market situation that you have to deep dive, let's say, per country, I would say. There's no, let's say, universal model, let's say, at Europe. We have to consider what, let's say, Vasileios very, let's say, very clearly said, the regulatory interventions that happen from one moment to the other, completely different from one country to the other. We have, let's say, the role of the suppliers in the whole, let's say, PPA market. Let's say here in Greece, just to give you an example, most of the strong, let's say, renewable developers are vertically integrated companies. So that means that they can own develop, let's say, the renewable assets and, let's say, advertise them to the consumers. At most of the times at very attractive prices, and also, let's say, in the context of a fiscal PPA, which also increases the security at the level of the consumer. This leaves, I would say, not a limited space, but let's say a very challenging space for curious developers, how to, let's say, to develop their project. To whom to advertise this project? It's a different thing to advertise your project, let's say, to a trader or supplier, and different to advertise, let's say, to a final consumer. Completely different challenges. Let's not speak about putting, let's say, a PPA contract in place, let's say, the details of such contract, let's say, the negotiation to reach a final agreement is, for me, it's very challenging, and we have, I think, all of us, such kind of experiences. What we see, however, now in Greece is that there is a growing tendency, at least from the side of the demand, from the side, let's say, of the buyer, to push for PPAs of a small to medium duration, let's say, to push, let's say, to a maximum, let's say, 5-year PPA, 3 to 5 year PPA. So this brings a lot of challenge, let's say, for the rest developers, of course. So the role of the banks, of the credit institutes, it's crucial. I think the maturity that exists in other markets, let's say outside Greece or in other countries, has to bring in, let's say, in our country, let's say, to allow the development of these renewable assets. I also agree that ESG compliance, let's say, and all this framework also gives a driver, let's say, for the further development of PPAs. But I foresee, I would say, that at the end of the day, let's say, either price saving or price hedging, let's say, the price stability, will remain, let's say, the ultimate goal out of this agreement. So there, also the role of the whole, let's say, value chain in the market, let's say, from the consultants, the developers, the traders, the owners, is crucial, because there we have all of us to bring on the table all the details, to be transparent, and to have a clear, let's say, understanding of the underlying reason from the different sides. Because at the end of the day, as I think you said, when you target, let's say, to fix a price, sometimes you are ready, let's say, to sacrifice a bit of the profit, but because you focus on fixing, let's say, a specific price. Other times, because you are profit-oriented in terms of cost savings, you are willing to risk on this. So these different attitudes, let's say, also are sometimes a bit of opposite, let's say, forces, let's say, in such kind of discussion. So definitely market exists, but it's a market that becomes more and more challenging.
Yeah, thank you. I agree with this. But what do you think are the major challenges that companies and stakeholders face when negotiating the PPAs? Is it the price, how to agree on the price, how to agree on the potential regulatory changes in the future?
Well, when it comes to negotiate a PPA, you basically need to allocate risk among the parties. So there are number of risks that need to be agreed. And this is something that need to be taught to both sides, so developer on one side and corporate on the other side. So aside from the price, we need also to deep dive into what is the let's say the profile the price is based on. So again, someone mentioned before a difference between a pays per use or a pays as or a base load. So we heard this morning about the forecast of the cannibalization, especially for obviously solar project around Europe, and it need to be, I would say, deeply priced properly into a produce PPA. In Italy now, for 5 to 10 years, the PPA, the cannibalization could be more than 30%. So this, might, I would say, jeopardize a little bit some of the investment. So price is, the main driver, but there are also some other risks that are, a bit undervalued by especially project owner. So I'm talking about what is commonly defined as the COD management. So we have all seen major delay in energizing and connecting projects in whole Europe. In Italy, there are big bottlenecks on both the TSO side and the local distributor. It means that when you need to, let's say, negotiate and fix the pay-as-produced price, you need also to have, I would say, a very sounded buffer between the guaranteed COD your EPC can commit on and the starting date of your fixed price. We have seen many of the recent PPA being announced in Italy having delay of more than 1 year. It means that if you don't, let's say, manage properly this phase of the PPA, so the starting and the guaranteed COD, you may end up by paying liquidated damage, which can simply then turn your PPA, I'm talking from a project owner point of view, into something that is not, I would say, economically appealing anymore. So COD management, obviously price. When we talk about price, we need also to talk about negative price risk. We were mentioning in some panels. This morning, Well, from a trader point of view, the negative price risk need to stay on the project owner side, meaning that unless you, I would say, foresee that your trader has the key of your power plant, so the key to turn on and or off the power plant, then there is no one actor into the PPA who can physically have the control of the plant. So obviously the trader can provide some kind of support, some kind of consultancy support in trying to share his view about when and if negative price will, let's say, happen in the day-ahead exchange. But at the end, this is my personal opinion, negative price need to stay on the project owner shoulder, which then means that when you need to run your business model, well, going forward, probably as one of the guy in the audience was raising this morning, you need to take care of this risk.
Yeah, I'm not sure banks are going to like this when they finance projects that developers have to take on this risk. Vasileios, what do you think are these main challenges from your perspective of Axpo? I know that you had some big issues with one trader here in Bulgaria that went bankrupt last year. So maybe if you can touch upon, apart from the price-related risk, which is obvious for everybody, anything else that you can bring in?
Yeah, I think Alessandro summarized it well. What I can offer, I think in addition to, of course, price and construction delay risks, which are fundamental in my view, other major challenges based on my personal experience that we encountered concern financial guarantees for the credit risk that each party will have to assume in entering into a long-term PPA, and performance guarantees for the actual operational performance of the asset. So I think if I am to look at each in turn, in terms of the financial guarantees, I think it's in most cases counterparties understand that the off-taker may have to provide a financial guarantee to the developer to secure the payment obligations in the future. Lenders will typically look at the credit worthiness of the off-taker, they will assess it. Sometimes they're happy not to have any credit support in place in the form of guarantees. Some other times they may request. What is not so clear in most PPAs that I have been involved in is that the developer also needs to provide credit support to the off-taker. Quite crucial actually, because the developer tends to be an SPV, zero assets, very thin balance sheet. So there is no guarantee actually that, for example, they will be in a position to compensate the off-taker in the event of a construction delay for the replacement cost of power that the off-taker will have to incur. The off-taker agrees to buy at 50 euros, the asset is late in being energized, and they have to buy at 150 euros. Typically, in a PPA contract, you will see a clause obliging the developer to compensate the off-taker for this economic loss. But an SPV does not have the financial firepower to do that. So I think a typical off-taker will ask for a financial guarantee until at least COD is achieved. And later on, they may also ask for some sort of second ranking lien on the asset itself, ranking below the lenders, of course. This has been a key point of contentions in our discussions in the past. And then I think another important point to mention is performance guarantees. So the off-taker expects the asset to be available, if not all of the time, but as much as possible. So yes, there could be some tolerance thresholds, but the off-taker will typically require a performance guarantee in the PPA contract, which says that if the asset underperforms and is not available for, say, 95% of the time, then damages kick in. And again, these damages need to be collateralized, and somehow the off-taker needs to be confident that there are sufficient performance guarantees to underpin a proper performance of the asset. And maybe a final point to add to this conversation, which increases the complexity, is that the lenders need to be happy with all these arrangements. So the risk to the SPV cannot be uncapped, because then the lenders will not be happy with the transaction. So, there is an allocation of risk, as Alessandro mentioned from the very beginning. It's not science, it's more of an art, and the parties need to decide where to draw the line. This, I think, is probably the trickiest part in the negotiation with PPA.
You think it's a good idea to, because usually PPAs are negotiated before the banks kick in, I would love to see it. You think it's a good idea to involve the banks in the negotiation to a certain extent to make sure that they like what you come up with?
It would be not a great idea in negotiations, but definitely I think they need to have sight of the overarching contractual principles earlier. Because of course the price depends on those, right? The price could be materially different if there's zero compensation for damages in case of delay, or if there is no performance. So I think the lenders need to be involved quite early at the stage. I guess the negotiation is on a bilateral basis between the developers.
So the UK perspective?
Yeah, I think that's, I think you've summarised the key points. And look, this game is all about risk allocation, right? So it's either the off-taker that takes the risk, it's the generator, the EPC contractor, insurance companies. But the key thing is how do you price that risk and who takes it? I totally agree. Construction risk is key, especially in the UK, given the issues that we have with the grid, and how that is impacting certain projects that haven't passed. And in the UK, we have a certain milestone with the grid called statement of works. If you haven't passed the statement of works, you're effectively still not guaranteed a certain timing on your energisation date. Availability is obviously key as well, but hopefully generators are managing that with strong EPC contractors and bank guarantees that go along with that. But one other aspect that we've really started to notice in the last 12 months is when you're sleeving energy, there is often a mismatch between the corporate PPA that you have alongside the counterparty that's actually firming the energy for you. So in the case of our last sleeving PPA, we had a 10-year PPA where it was where essentially our energy is sold on a 100% take-or-pay basis. The corporate is obviously very interested in obtaining baseload energy for obvious reasons, and they are exposed because most traders, utility companies, providers of basically balancing services can only operate on a 1-2 year basis, and that exposure is quite difficult, I think, for most customers to absorb. We've seen firming prices go up recently to quite significant levels, and actually appetite as well in the UK amongst many energy traders to not want to take on that risk, and that's obviously increased the prices. And so more recently we've noticed a lot of our customers finding it difficult to then take on that risk because of that mismatch.
Yiannis, anything to add on?
Yeah, if I have to add something where I also agree pretty much to the last comment, let's say that now we have increased challenges, let's say, especially when, let's say, negotiating, let's say, baseload PPAs or, let's say, more sophisticated, I would say, PPAs where, let's say, the consumer wants to have a specific profile, let's say, of and the hedge energy, so there we have increased, of course, risk from design perspective, but also, let's say, in terms of, let's say, reaching an agreement at the end, which most of the times is passed through in the negotiating price. Another issue, however, which I found quite, let's say, frictional, I would say, and also of a high risk in the recent years for the PPA contracts is all the provisions relevant to, let's say, to the section that refers to change in law, let's say. So this becomes more and more important, let's say, what kind of provisions there you have to integrate it, how to describe them, and what could be the exit clause, let's say, and if there are going to be any termination payments and so on. So this is also quite critical, let's say, in negotiating, let's say, corporate PPA at this scale. Also having in mind the whole discussion at EU level for the electricity market reform and many things that could happen and could be brought, let's say, on the table in the next couple of years. Yeah, that's, I think, in terms of risking, let's say, PPA negotiation.
Yeah, thank you very much. Actually, Vasileios, you kind of answered my next question. You talked about the risks, but any other mitigation measures to manage these risks that we just discussed when negotiating the PPAs? Vasileios mentioned guarantees, performance guarantees, careful, Yiannis mentioned to be careful negotiating potential future changes. Anything else that we can share with the audience to be careful on and pay attention to as mitigation measures to mitigate potential risks?
I think the key risk, in my view, is the risk of cannibalization of prices. Not so much insofar as utility PPAs. Utilities will have some form of risk management approach, but mostly with concern to corporate PPAs, directly between the corporate consumer and a generator. And I think there, corporate organizations should not underestimate that risk. So we see PPAs, for example, representing in terms of total yearly quantity of electricity generated from, say, a solar PV park, 100% of the yearly consumption of the consumer. This is putting all of your eggs in one basket, and if cannibalization, and what actually we think is happening with cannibalization is that it's growing at an exponential rate. This is something which is completely unhedgeable, cannot be hedged. So I think from a corporate perspective, avoiding this approach is the prudent approach. Having a PPA that represents a portion of your total demand, but not 100%, something that is significant to de-risk in terms of revenue streams, but keeping also an exposure to the market is, I think, a more recommended approach to protect against the risk of high cannibalization.
Yeah, I fully agree with you that diversification both on the consumer and the producer side seems to be like a good idea, simply because if you have one off-taker, you are becoming dependent on his, and a delay of payments is a big risk. Maybe curtailment is something that we didn't mention in previous panels, and I think everybody would agree that grid congestion issues and the slower development of grid compared to deployment of new capacities is more or less common for at least this part of Europe. And we saw it in Bulgaria about 15 years ago, where a lot of producers were connected to one part of the grid, and the grid just didn't have the capacity. This resulted in years of serious curtailment, up to 30-40% of the production to producers, which definitely messed up their financial expectations. Do you have any experience, have you dealt in your experience with this risk, and how can we manage it contractually?
Okay, this is mostly, I think, in terms of business plan from the side of the risk developer, because he has to integrate this highly in his business plan. I mean, here in Greece, let's say, just to give you an example, new renewable projects that get connection terms, they already sign, let's say, a conditional, connection term with the TSO, or the TSO has the right, let's say, to curtail a significant amount, up to 30%, let's say, of their power in specific, let's say, time windows throughout, let's say, their operation. So this is, it's of importance. However, I think you could try to see with the market maturity other ways to bypass this. I mean, we are starting to discuss even in the context of PPA about storage, let's say, and how to integrate storage, let's say, directly coupled, let's say, with a specific asset, or through aggregation, let's say, with a portfolio of assets. So in terms of both slim or even saving costs, to try to integrate this in your business plan and have, let's say, more solid product, let's say, to potential off-taker. Another issue which, if I have to just to add to also to what Vasileios said, I think let's say what it's growing importance, we have seen it also here in Greece, it's when you are offering the PPA, you are blending technologies. You are not just a sole, let's say, either PV or wind technology. You try to blend technologies in order, let's say, to offset at least to some extent the risk of cannibalization, let's say, in the future evolution of price. So a kind of more sophisticated, let's say, products, of course, whenever a RES developer or a trader, let's say, have this possibility to blend, let's say, different technologies and different products. But the issue of curtailment, I think, will become of far, let's say, higher importance in the next years. I mean, just to give you an example here in Greece we have a target for 2030 of, let's say, of at least, I would say, 14 gigawatts of PVs. I'm not saying about the winds, but of PVs, where we know that they produce in specific, because of the physics, let's say, in specific times of the day. So if you don't consider batteries, let's say, in the formula of the equation, you can understand, let's say, what will be the absolute numbers of curtailment, let's say, the associated risk for the developers in the years to come.
Yeah, I think, I mean, look, curtailment and grid congestion is really a function of the state of the grid and the level of intensity of renewable energy deployment, right? So if you've got a relatively old grid and then all of a sudden 10 gigawatts of solar coming on stream at the same time, that's when you have a problem. I think the market in the UK will hopefully resolve itself. We've already started to see in the last 4 years quite an influx of battery operators coming into the market, and they make a lot of money, right? They trade energy, and their business is all about volatility. And if you have a very congested grid, you get that volatility, and therefore you have more batteries coming into the system, which dampens the volatility and allows for more renewable energy to be inserted into the grid. It is an important issue for, I guess, a national issue. So I think governments need to be, and policymakers need to be very conscious about that, and being able to track volatile energy going into the system alongside making sure that the DNOs and the transmission network is fully supportive, not just from a CapEx perspective, but also from a people perspective in terms of staff. And that can be a challenge, right? So, I think whilst curtailment is an issue, and we have to keep one eye on it, and admittedly in the UK it's probably less severe than other parts of the world, I think it is something that can be solved through technology and just forward thinking with policymakers.
Yeah, thank you. I think we have about 3 minutes left for any questions from the audience. No one seems to be interested in how they're going to get that money for the project.
It's been a great job answering all the questions.
Just a few minutes, maybe to touch upon, Gurpreet touched upon the issue with storage and technology development. Do you think this will influence the future of the PPAs and how we negotiate them from pay-as-produced maybe to more towards baseload type of PPAs?
Well, obviously, as you was said, BESS deployment is the key factor to let's say, to lower the cannibalization effect. So even at a national level, as you was mentioned before, or as an co-investment of BESS with solar or with wind. So definitely yes, it will play a crucial role. Just want to mention one I would say one case that has been put on the press. There is this famous 20 years baseload PPA, which was signed in 2017 in Nordics. So between a big wind farm, 700 meg, and a steel aluminium corporate. So basically, the wind farm committed to provide with a predefined profile, so say a baseload. Then it turned to the need to go into the market and buy spot the missing volume. So long story short, this company, which is now owned 75% by a Chinese entity, has filed for terminating the contract simply because due to the spike in prices, basically the missing volume simply, took all the profit out from the generation and put the generation in, let's say, in bankrupt. So this is one of the risks that probably at the time the deal was signed and was brought by an infrastructure fund, probably was mispriced or undervalued. So definitely, if you put a best facility together with a PV, then obviously you end up by having the chance to commit on a different profile than the solar capture one.
Thank you very much, and I think we ran out of time. Gentlemen, thank you very much for the insights.